There are various levels of risk as well as return by the type of market entry that you decide. So, for example, exporting is fairly low risk. I mean, it's your product being exported, so somebody else is assuming all the risk. However, this also does mean that your level of profit or return to be made is substantially lower. In licensing and franchising, now you're taking a slightly higher risk because you're allowing somebody else to learn your intellectual property, your process, and you're giving them the right to represent your brand. The reward for this is, of course, more money. However, potentially if things don't go well, as in they don't do a very good job of it, you could lose quite a bit of money and reputation. The next level up is contract manufacturing. Here, the risk level becomes higher, but so does the return once again. From a risk factor, the contract manufacturer makes your product. They also develop your product. In fact, you're pretty much in charge of just the branding, as well as, of course, the communication and everything to do with marketing, apart from actually developing the product or making the product. As such, you can scale up pretty quickly, so the potential for return on investment is very high. But the disadvantage is what happens when the contract manufacturer starts to cut corners or comes up with a problem that they can't solve themselves. You're pretty much stuck. Because remember, you don't own your IP, they do. You own the image, you own the product, but the actual formula or how it's put together, it's not owned by you. The next level up is joint venture. The risk, once again, is higher. You're putting your money and your reputation on the line. But then again, so is your business partner or the company that you're aligning yourself with. This means that potentially with your combined resources, you're sharing the risk, but also sharing the profit. Maybe your expertise opens up certain avenues. Maybe their connection gets you certain contracts that you wouldn't have access to. However, the risk factor here becomes higher because what happens if one of your business gets in trouble? Does that drag you through the mud as well? Potentially, yes. At the same time, from a control aspect, now you as a company or you as a person can't make all the decisions. You have to share the decision-making process, which once again opens up risk. The last one, the most risky but also with the highest rate of return, is direct investment. This is where you go into a foreign country and buy out the company, whether it's a retailer, whether it's a manufacturer, whether it's a supply chain company, you buy the whole thing out. For example, did you guys know that Johnny Walker is owned by the Kuwait royal family? And if you're looking at football, Roman Abramovich is the owner of Chelsea Football Club. You've got the royal families, once again from the Middle East, owning Man City. I think that's the Etihad Group. Now, each of these investments, though to be honest, football clubs are terrible investments. But when it comes to buying actual companies, whether it's Johnny Walker, whether it's buying an entire building or a farm, there is a high risk to it. If the venture fails, you lose everything. But then again, if it's successful, it's all yours. Don't have to share it with anybody. So hence high risk, but also high return.